Hello and welcome back to our weekly Spotlight segment. Hope you've been enjoying this segment. Jason Chan Lee and I have been having a conversation about some of the statistical facts that he has that make him feel very, very comfortable. And I have to share the same view. I do believe our 2008 market is going to be phenomenal. We're going to have a great year this year. And we were talking about interest rates dropping, the conforming limit going from its current level at 417, increasing to somewhere north of 600 to maybe in the low sevens, which would be just amazing. And anyway, that's kind of just a background in case you're just coming to our program. But Chan, this is all great news.
Yeah, definitely.
All great news. So, and I love what we were closing the last segment with about the foreclosures, because we get hit with that so much in the media. Oh, all this problem. People are foreclosing. And it's, I mean, I feel bad for the 1,700 that are in foreclosure in Santa Clara County, but I mean, how does that compare to normally? Because people lose their jobs and they end up losing their house.
Yeah, every
so what
month,
is normal? Is it how many per year? Whatever the timeline is for 1,700. How does that compare to what's normal?
I mean, in the past, we always have about 20 or 30 houses in trouble and in foreclosure. Normal in the normal market,
right.
But because of the subprime influence the last few years, that now we are up to about 200 a month. And that number is kind of stabilized at that level, and I'm watching that number very closely. But remember, there are abundant buyer, investor from other areas that were willing to come back to the Bay Area and invest. Right. And I think that number will be stuck, will be disappear really quickly.
And what do you think they're waiting for?
I think they're waiting for somebody to tell them it's a good time to buy and give them a reason why it's a good time to buy and where to buy them.
So that's probably a good segue for us to have a look at some of your charts.
Sure. Yeah.
Because I think if people see statistics, they'll think this is a good time to buy. Mm-hmm. So let's have a look at your chart.
Well, the first one you have is the months of inventory throughout the county. We have the lowest months of inventory is the Cupertino, which is about 1.1 month. Now, to define months of inventory means that how long does it take that market to sell off all of its inventory. Okay, Cupertino only have 1.1 months of inventory, and you go next is Saratoga, it's about 3 months, and all the way down to Alum Rock. You see that like more than 46 months of inventory. That area we have a lot of subprime problem, and therefore those are where you can buy a good rental or investment property at the present time.
Right, and here's the Cupertino market.
Yeah, look at the Cupertino chart. I mean, this chart represents March of 1998 all the way to December of 2007. You can see the blue line there represent the median sale price that it's gyrating all the way from 525,000 to 1.1 million for the last 10 years. So what it means is Cupertino home, if you bought it in March of 1998, you would be making about 110% of your money.
Over that time period.
And at the end, notice at the end of December 2007, the inventory is so low. If you look at chart correctly, this thing going to go a lot higher pretty soon.
Yes, it's pretty amazing. Yeah. And our next slide, I think, is Campbell, correct?
Yeah, Campbell have the same effect as Cupertino, except that Campbell at this point have a little bit higher inventory. So with the spring market come, I expect the months of inventory number will be a lot lower.
Right. And this is an example of the sweet spot. If the average median price is $755 and a conforming limit gets somewhere in the mid sixes to low sevens, this is going to be a conforming loan. They get very favorable financing, and this again is part of what you're saying is going to prime the pump for a wonderful surge in this medium price home, whether it's in this area or in the next slide of Alum Rock or Blossom Valley in this case.
Yes, Blossom Valley have a little bit of the inventory issue where you can see that inventory today is a little bit higher than normal, and therefore this area here is also I encourage investors to go here and find some good buy, because now everybody experience a little bit of pricing pressure in that marketplace.
Right. Okay? And you can see that the price on this is significantly more than in Cupertino, where we had about 110%. This went up as almost to 200, like 180% at the high. Yes. So something that goes that high, you have to expect that there is most likely going to be a correction because it was an abnormal increase.
That's correct, Dan. I forgot to mention that, but thank you for...
we'll work together on this. We'll get this right. So let's kind of, we've got a few minutes left, so kind of bring all these charts and all these facts together. You know, we've come through a difficult time in '07.
Yes.
And generally speaking, '08 you feel are just going to, it's a freight train coming.
The way I look at this market, it's just like, for simplicity, I have an analogy. Just like a parent that have two kids with financial problem,
Right.
and one of the kids have only $1 problem, and the other kid have $10 problem,
Right.
and then the parent decided to give each one equally $5. Okay, and then the one with $1 problem, it, you know, all of a sudden don't even have a problem and also have $4 to spend.
Right,
now,
right.
Bay Area is the kid with the $1 problem and receive the $5 gift from the parent. So what are we going to do with the $4 then? I think this market go up because of the extra money that will pour into this area. You know.
Compared to maybe Los Angeles,
Yeah, Los Angeles, right.
who's really a $10 problem, is going to get $5. It's going to help some people, but there'll still be a lot of people that will probably still read about or hear about in the media that really aren't going to fare
That's
too well
true.
in spite of a lot of this. But here locally in our economy and in our valley, we are very strong.
I fully expect that the Central Valley, Sacramento, and Southern California will have a long way to go before they bottom out. But Santa Clara County, sometime this year, will set a bottom, and our market will bounce from here.
And I guess the question would be, well, if you say it'll experience the bottom, I would like to say if it's not at the bottom, it's probably 95 or closer to that 90% there, 95 or 96, 97% of the bottom. And if you're going to try to market time, you'll probably miss the hit, and it could be now. We're not going to know if the bottom's here until we start getting statistical data, and then it's turned, and you may have already started losing money.
Yeah.
Now is a wonderful time, as you and Joe Lamb have each said. This is a wonderful time to buy for a lot of reasons.
Sure enough.
All right. Well, thank you for your information, Chan. If any of you are interested in getting information from Chan, please contact